Are you struggling to save money and pay off your debts? In today's economic climate, this is a question that resonates with many. It's no secret that financial management is a critical aspect of our lives, yet, it's a challenge that often feels insurmountable. The struggle to save money, the burden of mounting debts, these are issues that millions grapple with every day. But what if there were practical strategies that could help you navigate this tricky terrain? This is the purpose of our video today. We're going to delve into actionable tactics that you can employ to start saving money and chip away at your debts. We're not promising a magic bullet, but we are offering a pragmatic approach to a problem that many face. So if you're ready to take the reins and regain control over your financial life, then this video is for you. Stay tuned if you're determined to regain control over your financial life. The first step to financial freedom is understanding your financial situation. Let's dive into that a little deeper. Financial awareness is like a compass, guiding you through the vast ocean of financial decisions. It's about knowing where you are, where you're going, and the best route to get there. Now imagine you're on a journey. You wouldn't start without a map, would you? The same principle applies to your finances. Your financial map is your budget. It outlines your income and expenses, helping you navigate your way to financial stability. Your income represents the fuel for your journey. It's the money you earn from your job or other sources. It's important to know exactly how much you're bringing in every month. This is your starting point, your financial baseline. Expenses, on the other hand, are the costs that you incur along your journey. These range from the essential, like housing and food, to the discretionary, like entertainment and travel. Tracking your expenses lets you see where your money is going and helps you identify areas where you could potentially cut back. Budgeting, therefore, is not about restricting your spending, but about understanding it. It's about making informed decisions on how to use your money effectively. It's about aligning your spending with your values and priorities. But here's the hard part. You need to be honest with yourself about your financial situation. If you're in debt, admit it. If you're living paycheck to paycheck, acknowledge it. There's no room for financial denial here. The only way to improve your financial situation is to face it head on. Remember, it's okay to make mistakes as long as you learn from them. It's okay to have financial setbacks as long as you don't let them define you. Your financial journey is unique to you, and it's not going to be perfect. But with financial awareness, you can make it a journey to be proud of. Knowledge is power, especially when it comes to your finances. Now that you understand your financial situation, it's time to set some goals. Understanding your financial landscape is only half the battle. The other half is charting a course, setting financial goals that will guide your monetary decisions and habits. Goals give us direction, they provide a sense of purpose and a clear benchmark to measure our progress. Imagine for a moment that you are on a journey. You wouldn't start a trip without knowing your destination, would you? Similarly, you shouldn't embark on your financial journey without clear goals in mind. They are your financial destination, the place where you want your money to take you. Now, financial goals aren't one size fits all. They can be broadly classified into three categories: short-term, medium-term, and long-term goals. Short-term goals are those you aim to achieve within a year or two. They can be as simple as saving up for a vacation or purchasing a new gadget. They often require smaller, consistent savings. Medium-term goals, on the other hand, are goals you plan to achieve within 5 to 10 years. These could include saving for a down payment on a house or your child's college education. They typically require a more substantial amount of money and therefore a more disciplined savings regimen. Long-term goals are goals that require more than 10 years to achieve. They are usually more significant and life-altering, like retirement savings or paying off your mortgage. These goals require patience, perseverance, and a long-term commitment. But remember, setting goals is just the beginning. Each of these goals requires a unique strategy and a specific savings plan. You need to figure out how much money you need for each goal and how much you need to save each month to reach it. Remember, a goal without a plan is just a wish. So, start planning today and turn your financial wishes into achievable goals. A budget is a crucial tool for managing your finances. Think of it like a fitness tracker for your wallet. It's not just about keeping tabs on what's coming in and out. It's about understanding the why behind your spending patterns and making informed decisions. So what is a budget? In basic terms, it's a plan for your money. It's a roadmap guiding you toward your financial goals by clearly outlining your income and expenses. It's about balancing your needs with your wants and ensuring that every dollar you earn has a purpose. Why is it important, you ask? Well, a budget gives you control over your money. It helps you stay on track, prevents overspending, and allows you to allocate funds for savings, investments, and debt repayments. It's all about making your money work for you, instead of the other way around. Now let's talk about budgeting methods. There's no one-size-fits-all approach here. Some people swear by the envelope method, where you physically divide your cash into different envelopes for different expenses. Others prefer the zero-based budgeting method, where every dollar earned is assigned a job, be it for bills, savings, or discretionary spending. There's also the 50-30-20 rule, where 50% of your income goes to needs, 30% to wants, and 20% to savings or debt repayment. This method can be a great starting point for beginners as it provides a simple, clear structure. However, if pen and paper or spreadsheets aren't your thing, don't worry. There are countless free budgeting tools and apps out there to help you. Mint, YNAB, you need a budget, and PocketGuard are just a few examples. These platforms can link to your bank accounts, track your spending, and even alert you when you're nearing your budget limit. Remember, creating a budget is not about restriction, it's about freedom. Freedom from financial stress, freedom to make choices, and freedom to achieve your financial goals. As the saying goes, a budget is telling your money where to go instead of wondering where it went. Reducing expenses is often the quickest way to start saving money. It's a simple truth, but one that can sometimes feel overwhelming. Where do you start? How do you distinguish between what's necessary and what's a luxury? Let's break it down. First, it's important to understand the difference between needs and wants. Needs are essentials, the basics of life: food, shelter, clothing, healthcare. Wants, on the other hand, are extras. They're nice to have, but not essential. The latest smartphone, a brand new car, a lavish vacation. Recognizing this difference is a critical first step in reducing expenses. Now let's look at practical ways to cut costs. Start with the necessities. Can you find a cheaper grocery store? Could you carpool or use public transport to save on fuel? Are there more affordable options for health insurance or utilities? Small changes can add up to big savings. Next, consider your wants. Do you really need that new gadget, or could you make do with what you already have? Could you opt for a staycation instead of an expensive trip? Remember, every non-essential purchase you forego is money saved. One effective strategy is the 30-day rule. If you're tempted by a non-essential purchase, wait 30 days. If you still want it after a month and it fits within your budget, then consider buying it. Often you'll find that the urge to buy has passed. It's also worth looking at recurring expenses. Are you paying for subscriptions you don't use? Could you switch to a cheaper phone plan or internet provider? Again, small changes can lead to significant savings over time. Remember, reducing expenses doesn't mean living a life of deprivation. It's about making smart choices, prioritizing your spending, and recognizing the difference between needs and wants. In the end, it's all about balance, living within your means while still enjoying life, because after all, every dollar you don't spend is a dollar saved. Debt can feel like a heavy burden, but there are strategies to lift it. One such strategy is the snowball method. The concept is simple. Start by paying off your smallest debt while maintaining minimum payments on your larger ones. Once your smallest debt is paid, take the money you were using for that and roll it into the next smallest debt, creating a snowball effect. This method may not save you the most in interest, but it can provide a psychological boost by giving you quick wins. On the other hand, there's the avalanche method. This approach requires you to pay off your debts starting from the highest interest rate to the lowest, regardless of the size of the debt. It might take longer to see results, but in the long run, you'll save more on interest. Now let's talk about the importance of making more than the minimum payment. When you stick to paying only the minimum, the majority of your payment goes towards interest, not the principal. This means it'll take you much longer to pay off your debt, and you'll end up paying more in interest over time. Making more than the minimum payment, even if it's just a little bit, can help accelerate your debt payoff and save you money in the long run. Remember, while these strategies can help, they're not one-size-fits-all solutions. Your situation is unique, and what works best for you might not work as well for someone else. Take the time to evaluate your options, consider your own financial habits and goals, and choose a strategy that feels right for you. And finally, it's crucial to remember this. The best way to get out of debt is to stop getting into more debt. This might seem obvious, but it's easier said than done. It requires discipline, budgeting, and a commitment to changing your financial habits. But with a solid plan in place and a commitment to stick to it, you can lift that burden of debt and move towards financial freedom. An emergency fund is your safety net for unexpected expenses. Imagine you're walking a tightrope. The higher you are, the more vital it is to have a net beneath you. Just like walking that tightrope, the more financial responsibilities you have, the more crucial it is to have an emergency fund. So, what exactly is an emergency fund? It's a stash of money set aside to cover the financial surprises life throws your way. These unexpected events can be stressful and costly. Examples could be losing your job, or a sudden major expense like a car breakdown, or a medical emergency. Having an emergency fund can provide you with a sense of security and allow you to take financial risks without the fear of being buried in debt. Now let's talk about how much money should be in your emergency fund. While the amount can vary depending on your financial situation and lifestyle, a good rule of thumb is to have enough to cover 3 to 6 months' worth of living expenses. This should give you ample time to bounce back from most of the financial pitfalls you might encounter. So, how do you start building an emergency fund? There are several strategies you can employ. First, start small. Even a small emergency fund can cover minor unexpected costs and help you avoid debt. Next, make regular contributions. Treat your emergency fund like any other necessary expense. Set a monthly savings goal and stick to it. Another strategy is to automate your savings. Set up a direct deposit or automatic transfer to your savings account. Finally, consider stashing your windfalls. If you receive a tax refund, a bonus, or an inheritance, resist the urge to splurge and put that money into your emergency fund instead. Remember, building an emergency fund is not a race, but a marathon. It may take time, but the peace of mind it brings is worth every penny. An emergency fund turns a crisis into an inconvenience. So start building your financial safety net today. Financial freedom isn't a dream, it's a series of deliberate steps. And we've walked through these steps together today, haven't we? We've embarked on a journey to understanding our financial situation, the very first step towards achieving financial freedom. We've learned the importance of being honest with ourselves about our income, expenses, and debts. We've recognized the need for a clear picture of our financial health as a starting point. From there, we've looked at the significance of setting financial goals. We've understood that whether it's paying off a credit card, saving for a vacation, or planning for retirement, having a target to aim for can provide us with the motivation we need to stick to our financial plan. We've also delved into the crucial aspect of creating a budget. We've seen how a well-planned budget not only helps us keep track of our spending, but also guides our financial decisions. It's our roadmap, leading us towards our financial goals. Next, we've explored the world of reducing expenses. We've learned that every penny saved is a penny earned, and how making small changes in our daily habits can result in significant savings over time. It's not about depriving ourselves, but about making smart choices. Then, we've discussed the strategy of paying off debts. We've understood the burden that debts can place on our financial freedom and the importance of developing a solid plan to pay them off. We've seen how tackling our debts head-on can free us from financial stress and open up opportunities for growth. Finally, we've stressed the importance of building an emergency fund. We've realized that life is unpredictable and having a safety net can provide us with the peace of mind in case of unexpected expenses. Each of these steps is an integral part of the journey towards financial freedom. They're not mere suggestions but necessary actions. They're the building blocks that, when stacked together, construct a sturdy foundation for a financially secure future. Take control of your finances today, and enjoy the peace of mind that comes with financial freedom.